Right, listen up. What I'm about to reveal over the next 12 minutes literally took me over 9 years to learn the hard way. I made every mistake you possibly can in crypto trading, from blowing up accounts to chasing pumps to getting wrecked with leverage. But these failures, these mistakes, taught me the exact strategies to lock in millions of dollars of profit for myself and for the GTG community. And if you think trading is either luck or following a guru's calls, you're about to have your mind absolutely blown. Now, most trading tutorials on YouTube will give you some basic TA, they'll throw in some fancy indicator, and they'll call it a day. But what I'm going to share with you today is different. These aren't just strategies. These are psychological frameworks and systematic approaches that separate the 5% who consistently profit from the 95% of the people who get absolutely destroyed in this market. Over the past few years, I've helped build GTG into one of the most successful trading communities worldwide. We've called everything from 100x meme coins to the perfect Bitcoin short. But more important, what separates us is our ability to teach other traders how to think like professionals rather than being a gambler and trading like a degenerate. So in the next 12 minutes, I'm going to break down the 5 core strategies that took me nearly a decade to master. Now, the first strategy I want to talk about today is something that literally saved my trading career when everything else was, quite frankly, failing. Now, most traders think that they need volatility, that they need a trending market to make money. They constantly chase those 100x's, the next moonshot. But realistically, what they don't understand is that some of my biggest gains have come from the most boring sideways price action that you can ever imagine. And there's a specific reason why range trading, and that's the strategy I'm going to teach you today, is so powerful. But before we explain that, let me show you how it actually works. Range trading is all about identifying when price action is consolidating between a support and a resistance line. Think of it like a tennis ball bouncing between two walls over time. Now, the beautiful part about a range is that you get multiple opportunities. Not just one, not just 3, not just 5, but you can have a range that lasts for multiple months and give you up to 50 opportunities to long and short the market. Now, just over the past couple of months, we saw BTC go sideways for a long period of time. And whilst a lot of retail traders were saying this is boring price action, we in GTG were systematically longing the bottoms and shorting the tops. And we did this repeatedly over a period of time that gave us multiple 10% moves to the upside and to the downside. The key in understanding that ranges are distribution and accumulation phases. They're not a trending market like we see here, where price went crazy from 74 up to 100K. They are sideways price action, and honestly, they're one of my favorite price actions to trade. Smart money is quietly accumulating, while retail traders move on to the next shiny thing. But here's why most people fail at range trading. They get impatient. They see one rejection or they see one distribution above and they start thinking, oh, we're about to go even higher, when actually we're going to stay in that range for a long period of time. This impatience is what separates profitable traders like us in GTG from the ones who blow up their accounts consistently over time. Now, range trading is super powerful, but there's an even more precise strategy that I use every time to nail my entries and exits with surgical precision. This next strategy has literally been my secret weapon for multiple years. It's based on something that most traders completely misunderstand. Everyone knows about the Fibonacci retracements, but here's what they don't teach you. They think that it's just about drawing some lines on a chart and hoping for the best, like you see here on Mog. But there's a specific methodology that a systematic approach can be taken from when you use the Fibonacci in a particular way. And essentially what it does is remove the guesswork, and it allows you to use it as a precision instrument. So let's look at a real life example. So when you combine Fibonacci levels with key understanding of market psychology, you can consistently lock in 2, 3x, sometimes 5x moves, but the opportunity is about understanding, and the key to understanding is which levels actually matter. So what I've done is I've marked out the 0.5 and the 0.618. We call this the golden Fibonacci retracement level. This is essentially where a lot of the magic really happens. When strong assets, something like this, where MOG breaks out really strong, okay, and consolidates in this bull flag between support and resistance yet again, we see pullbacks love to go to their 618 or their 0.5, and then that's where the reversal actually occurs, and that's where you can capture a trade. Now, what we see here is a huge move, okay, a significant move exactly off this level. So how did I enter this? I would have had a entry at this low here, would have had an entry at this low here, and what I'm doing is having my stop loss below the previous low. So if we mark that on the chart, here I am, I'm targeting this high over here for a move of 100%, so that's a 2x, and my stop loss would have been below these lows here. And that's a very safe trade where you have minimal downside risk, only 29%, for a risk to reward of 3.6. Now, ultimately, there's a few other things to consider when entering a trade like this. You don't just blindly ape like a retail trader. You are a smart trader, okay? So what you're aiming to do is to think about it in an advanced way. So what you're looking for is market structure breaks. So what we have here is a higher low. That's the first thing. The second thing is that we have a higher low off the golden pocket. Wow. That's exactly what you need to see. The third confluence that I love to see is that this was a bottomed out RSI up the top. So thus that means that this was oversold and likely to pump from this region. But here's the psychological edge, actually a little secret. Most retail traders worry because they see a 30 to 40% pullback and think that their gains are over, the trend is over. Meanwhile, smart money is accumulating at these exact levels that I just showed you because they understand that a healthy trend requires a healthy correction. Now, these technical strategies are crucial to dominating this crypto market, but there's something even more important that determines whether you will actually succeed or fail consistently over time. And it has nothing to do with charts or indicators. Here we go. This might be the most important thing that I tell you in this entire video. After 9 years in this crypto market, I can tell you with the absolute confidence and certainty that trading is 80% psychology and 20% strategy. You can have the best setups in the world, the best indicators in the world, but if your mind isn't right, you'll find a way to lose money. There's one specific psychological trap that destroys more traders than anything else. Once you understand this, everything changes. It's called the need to be right syndrome. Most traders approach every trade that they take based on their ego. Rather, they would not take a small loss because it will damage their reputation. So what they do is hold a losing position because they hope that it comes back. And they'll cut a quick take profit because they don't want to lose their profit and give it back to the market. I've personally been in this situation before. And I learned this the hard way in 2019 when I was in a BTC long. And sure enough, I round tripped a 300% gain because I couldn't admit to myself that I didn't want to be wrong. And I ended up walking away with a 50% loss on the trade. Now, here's how you fix this, because a lot of people do get this wrong every single day in market psychology. Every trade that you take, you must abide 3 strict rules. You must have an entry, you must have a stop loss, and you must have a take profit. Without these 3, you are essentially gambling in the market. So once you're in a trade, always stick to the plan no matter what happens. Have your invalidation there, have your take profit targets, because at the end of the day, if a trade changes and your emotional or your psychology changes, you're essentially going to lose out on this trade more often than not. And this happened to me a lot during the last cycle. But there's a deeper level to this market psychology. The best traders I know, they're not trying to guess or be right about which way price is going to go. What they control is their risk management. I know, and they know, that if they keep their losses to a minimum, and if they let their winners run, they will walk away profitable more often than not. Even if their profit win rate is only 40%, they will walk away profitable over time. Think about it this way. If you don't have a trading plan, you are essentially gambling. If you deviate from your trading plan, you are using your emotions in the current point of time and taking away the analysis, the calm strategies that you had to enter that trade in the first place. And that's a bet that you will lose more often than you will ever win. Now, all these strategies really work, but there's one element that ties it all together. The final strategy is so simple that most people dismiss it, but literally, it is the difference between consistent profits and consistent losses. In a world where everyone wants instant gratification, where people ape into a FOMO green candle, where they ape into a huge breakout every single day, there's one edge that never goes away: patience. I speak about it daily, but not every kind of patience is the same. We're talking about strategic patience with trading. Now, the market gives you maybe 10, 15 opportunities per year where there's high probability setups, where risk to reward's really good, the technicals look good, the market structure is showing you bullish continuation higher, or in the short sense, it's going to go lower. Most traders miss this because they're zoomed in on low time frames and trading intraday setups rather than zooming out and taking the macro look. A perfect example is Pengu right here. Now, I've been very vocal about this on Twitter, on YouTube, and what we're seen is a huge breakout to the upside. Now, we consolidated sideways here for a long period of time. Fear was at extreme highs. People were calling for new lows. People were calling for Pengu to go to zero. But what we did is take a market position at the ultimate lows. We were watching low time frame structure. We saw that this was forming a high low, high. Thus, we've had a market structure break, and then we took that trade initially there. Second opportunity, we actually saw consolidation period again for a long period of time. This was about 50 days. This period here was over that. It was about 3 months here where we had to stay patient. But what we got was a huge accumulation zone and an opportunity to lock in consistent gains. And I mean, this one went absolutely nuts. It's a 5x there. And the bottom tick here that we got was over an 8x in percentages. Now, I actually just took profit on the Pengu trade just yesterday. And this has been one of my best trades all cycle because what did I do? I exercised strategic patience. But here's what's really happening when you train your mind, practice strategic patience. You're not just waiting for a beautiful setup to take place. You're training your mind to think like an institution rather than a retail trader. Institutions don't trade day to day. They wait for their beautiful setups and then they go big. So here's what I want you to do. Rather than taking 20 mediocre trades over the next month, focus on 2 to 3 exceptional setups. Your win rate will drastically improve, your stress will go down, and your profits will compound faster than you ever thought was possible. Now, remember, In trading, your biggest enemy isn't the market, okay? It's not the market. It's boredom. Boredom leads to overtrading. Overtrading leads to mistakes, and mistakes lead to blowing up accounts and losing money. Now, there's one more concept that I need to bring to your attention that really wraps all these strategies together. Most traders focus on individual setups. I made 10% over there. I made a 2x over there. I lost 20% over there. What you need to do is really step it back. Where the magic really happens is understanding that trading is a system. It's a plan. It's holistic. It's not a collection of ABC random bets. It's called the compound effect. And yes, I speak about this so often that you should already know this, but let's touch on it once again. When you combine risk management, strategic patience, beautiful setups, and proven narratives, something beautiful in itself really starts to happen. Your profits start to compound exponentially over time. Let's say you start with 10K. If you aim for just 10% per month, what you walk away with after 1 year is around 30 grand. After 2 years, you start to walk away with 100 grand. And after 3 years, you walk away with only 10% per month, starting at 10K, you walk away with 300K. That's a 30x in 3 years because you were patient with your time and you were consistent with your strategy. Now, here's the catch. If you really want to achieve this, you need to be consistent. One blown account, one huge meme coin trade, or whatever it is that you're gambling on can really reset you back to zero. So what you need to focus on and understand is that risk management is absolutely everything. All right, let's wrap this up. We've covered 5 game-changing strategies today. Range trading for consistent profits in any market condition. The Fibonacci tool for precision entries. The psychology of risk management over being right. Strategic patience for maximum edge. And lastly, the compound effect that turns small consistent wins into life-changing wealth. Now, I know what some of you are thinking. That sounds great, Greenie, but how do I actually implement these over time? And that's a very fair question to ask because knowing these skills and executing them consistently are 2 very different things. But that's why we build GTG. It's where we break down these exact strategies in real time and help you develop the skills so that you can execute these consistently. If you're keen to check out GTG, there's a link down below in the description. But remember, whether you join GTG or not, it's important to start thinking about your crypto trading differently. Stop gambling, start investing. Stop chasing, start waiting. Stop hoping and start planning. Thanks for watching. Smash the like button if this helped you. Subscribe if you want more content like this, and I'll see you in the next one. Until then, trade safe and stay profitable.